All right, this is it. Welcome back to Market Day Report. I am Scott Shelby, otherwise known as the Cow Guy. Speaking of which, at the top of the hour in about 14 minutes, 1 Central, 2 Eastern, we've got the Cow Guy Close. Look forward to seeing you there. Fast-paced, half-hour, informative, and fun. We're going to get through a lot of today's action on that show. We go in a little bit of a deeper dive, too, so it'll be good stuff. Cow Guy Close, 1 Central, 2 Eastern, in about 13 and a half minutes from now. All right, let's take a look at what we've got going on in front of us here as we go into the close. Corn lower here. December off 7 cents to 6.89 even. It's just less than a penny off the lows, but trading weak as we go into the close. March off 6 1/4 cents to 6.93 1/4. How about soybeans? What do we have happening in soybeans after their big day yesterday? They're coming off a little bit, but that's still hanging in there pretty well, considering we were up over 70 cents yesterday. 11 3/4 cents lower in that NOVE contract to 14.76 1/4. That is a new low. That's a bummer. We're 11 cents lower in Jan to 14.81 1/4. How about wheat in Chicago? Chicago wheat. This is giving up its gains. This December contract's down 4 3/4 cents to 8.54 even, 3.5 cents off the lows. We've got March 3 1/4 cents lower to 8.70, and that too is about 3 1/4 cents off its lows. Hard red wheat in Kansas City, trading a little weaker too, but still hanging on to a positive gain on the day. Deese is up 3/4 penny. That's 3 ticks. 9.27 3/4 is about 6 cents off the lows there. 1.5 cents higher in March to 9.29 1/4. Let's go to spring wheat. What do we have happening in spring wheat? Deese is now down 3 cents to 9.23 1/2. Penny and a half off the lows there. 2 3/4 cents lower in March to 9.35 1/4. And then finally, this is the one that's really been taking it on the chin all day. 350 points lower in Deese to 102 spot 21. That gives us time to bring in our next guest analyst, Ted Seifried from Zaner Ag Hedge. He's coming to us, I believe, in Chicago. Ted, thanks for being on the show. Well, lots to digest over the last 12 to 24 hours, and here we sit. What are your thoughts?
Well, the market's still really trying to digest all of the things that we're throwing at it. We have very contradicting things happening today. You had a soybean market in particular that really wanted to extend the gains that it saw yesterday from the USDA's shocking yield number and lower harvested acreage number, and therefore production number, i.e. Also the carryover number. But a really shockingly bullish report for beans yesterday, a sharply higher day for beans yesterday. And again, wanting to extend those gains. We did so in the overnight session, but then here today, we have a pretty massive risk-off day happening with CPI numbers coming in much hotter than expected. That really sent the stock market reeling. We have a big outside reversal down day with the Dow down over 800 points, S&P down over 120. That put a lot of pressure on crude oil for a little while, but now crude, if you look at it, is about $2 off the lows. We have some very flighty and nervous markets right now, Scott. And, so the question is going forward, does the bullish USDA report that we just saw give us reason to continue to go higher in the grains counter seasonally, or do we say, hey, that might be the most bullish number that we see for a while, and we're not sure if that's where our soybean yields end up because we've had some contradicting reports, for Farmer Crop Tour, for example. And now it's a demand question. And at these higher prices, at some point you do maybe get some demand destruction if we're going to go into this global recession risk-off sort of time frame. So we're trying to juggle a whole lot of things here, and you've got some very nervous markets. Now, something that you said a little bit earlier, for all the strength that we saw yesterday, down 11 3/4 in beans and down 7 1/4 in corn, that's a pretty decent hold of the move that we saw yesterday. Right. So, for today, we're not doing any major chart damage. We haven't really done a whole lot to negate yesterday's bullishness. But if this risk-off continues, you would think that the grains won't be completely immune to that at some point, too. So
I agree.
Really interesting markets and very, very nervous and not a whole lot of direction.
All right. Hanging right there on those last words. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge in Chicago about the livestock after this. All right. Welcome back. Let's jump in and see what we've got going on in these livestock markets because they're definitely going to be affected by both the grains and the consumer price index we got today, that inflation number. Let's take a look at live cattle. Let's bring up that board. Live cattle, December is lower by 95 cents to 150.40, 30 cents off the lows, trading heavy as we go into the close, but also just trading quiet. Feb's off 92 cents to 154.62, and that too is about, 32 cents from the lows. All right, so live cattle quietly lower. Feeders are lower, and it's not that quiet. They're actually leading the way down here. $2.62 lower In October, that's 180.50. Well, still a $1.50 off the lows there, though. And November is $2.45 lower to 182.35, and that's a $1.35 off of those lows. And finally, let's take a look at lean hogs. They were higher earlier, and they've actually added on. They've taken some more real estate back here. $3.95 higher in October hogs to 95.82, and that's up against the highs there. So we're only about 22 cents off the highs in October. Well, of December, right behind it's up $2.70 to 85.47. That's a good going. All right, let's get back to Ted Seifried from Zaner Ag Hedge in Chicago. Ted, thanks for sticking around in the wings. What are your thoughts when it comes to these livestock markets?
Well, not terribly surprised to see live cattle down, considering the massive risk-off day that we have. We're fairly sensitive when it comes to the stock market and our thoughts on what that might mean for consumer demand. So when you have a big reversal down day in the stock market, you would expect cattle to be a bit lower as well. Feeders are the leaders, so that
Right.
we look at that. And it doesn't come at a good time in a chart for live cattle. We've had a really big problem in the December live cattle at the 150, 170 level. This is another failure up there. We have multiple tops up here. So really, it's kind of going to depend on what happens with stocks tomorrow. Are we going to take this all back and go roaring higher? Or is this the beginning of what could be a venture into new lows? And if that's the case, well, then a lot of these things are going to have some problems,
Right.
except for, as we've talked about, maybe the hogs, because I think your speculative investors look
Right.
at pork as being that cheaper protein alternative that might find more demand on a bit of a recession.
Right.
And I think that's why you've got hogs sharply higher here today.
That looks like it, too. I agree with you there. That's some good going. I appreciate the content. Great content. Ted Seifried, Zaner Ag Hedge in Chicago, is coming to us in Nashville. So I can throw this back over to Janet one more time.